We're live. Who's here for the live? Yeah, that's right. Big round of applause. Duncan's here. John is here in the background, making sure that everything runs smoothly. We have tons of charts to get to today from Y Charts. Shout out Y Charts. Put up the tile. This is the best sponsor in all of financial media. Sean has entrusted us as the internet's ambassador of Y Charts. We have a link below us. If you've never given Y Charts a shot, you can sign up for a discount, first time sign up for a discount, and you're going to see tons of stuff that we've made using Y Charts today and in all of our content. Y Charts is the best. Are you a crypto punk today?
Always, every day.
What do you got going on down there? Everything okay? Chris, you making a sandwich?
Chris just FaceTimed me.
Does Chris not know what we do at 5:30 every day? Shout out to Chris. All right, who's in the house today? Ken Havens is here. Philip Shaw. Jay Luther, what's happening? Brent Wall. I love the bees. I love the blue caps for Duncan. Hugh Jassie's here. Jason. Kevin LaCroix. Where's my background? Warren Z is here. Nolan. There's so many. We can't get to everybody. We love you all, though. We appreciate you guys coming out for the show. Obviously.
Hugh Jassy sounds like Hugh Jessol.
Yeah, no, I know what's going on there, but I'm saying sometimes you never know. That could be somebody's like pseudonym.
That was probably his real name, Hugh Jassy.
Sounds right. Michael Kruger, Alex A. All right, let's get into it.
Who cares who's here? Let's get going. Come on.
It almost doesn't matter, but it does.
5:32.
All right. I want to do this thing about Paulson's crypto take because I have a take on his take, and I wanted to hear what yours was first. We haven't spoken about this, but basically, he was like, "Nah, I see where it's trading. It's still worth nothing. It's still a bubble. It's still going to be worthless."
Can I blow your mind?
Yeah, go.
So he sat down. Which billionaire did he sit down with? I forget that guy's name. Do you think that gold is a good investment at this price? He goes, yeah, we do. We believe that gold does very well in times of inflation. Pause and insert my gold since 2011 chart. Dude, what we're showing you here is gold since 2011 in purple and inflation in orange. Holy freaking cow, dude. Chart off.
Wait. That's an achievement?
Does it track inflation or does it track inflation?
For 10 years? Yeah, you nailed it.
Okay. Hold on, last thing. Charts since 2010. All right, so in fairness, so there's gold outperforming CPI since 2010. Chart off. Josh, he launched his gold fund in 2010 and made $4 billion that year from gold.
But from gold going up or from taking a 2 and 20?
Stop. Dude, look at that gold. Chart back on. 2010, I think gold was up. Well, you see what gold was up. It was up a lot. Chart off.
Yeah.
He made $4 billion.
Fantastic timing.
All right.
Should we put the S&P up or would that be cruel?
All right, take your take.
Okay. I don't even want to talk about gold as much. I would go like this. What about crypto? This is, I guess, a Bloomberg. This is a Bloomberg interview. What about cryptocurrencies? Are you a believer? Paulson goes, no, I'm not. And I would say that cryptocurrencies are a bubble. I would describe them as a limited supply of nothing. So to the extent there's more demand than a limited supply, the price would go up. But to the extent that demand falls, the price would go down. There's no intrinsic value. Okay.
Wow.
Everyone gets
profound. By the way, it was with David Rubenstein. That was
right.
That was who the interview was with.
All right. There's a small group of billionaire Wall Street people who are bearish to the point of it's worthless on crypto and Bitcoin left. And I guess we'll add John Paulson to that list. Munger, probably the most prominent member of that, Buffett and Munger. Michael Burry, Michael Burry, I think in March was trashing Bitcoin or something. I understand why it's relevant, but that doesn't mean it's worth anything, which I think is a reasonable take. Paul Singer, Elliott Management. This is the best. This is what Paul Singer said at the end of his January letter to investors. Quote, hiding under the bed to avoid people who gloat about being long Bitcoin can get tiring. Deep breathing exercises can work, but only for short periods. We continue to press on for the day when we can say, quote, "We told you so," end quote.
Wow, he wrote that? Why would you write that?
I don't think he's short it though. He could say, "I told you so," but he's not short it. What's Bitcoin up year to date?
A ton.
A ton. So, and I don't think Paulson's shorting it either. He explains why. If something could go from 5,000 to 45,000, and you're short it, you might someday be right and knocked out on the way there.
All right, what's your take? Come on, get to it.
Well, maybe just like when you retire, just stay retired. What do you think about?
He is retired.
Right. So now,
he shut his fund in 2020.
So why talk at all?
Because he was, I don't know. He's talking with David Rubenstein, a fellow. They're chatting. He's allowed to give his opinion.
Yeah, but they could do that at the deli. They could do that over matzo ball soup. They don't have to do that on television. Because if you're raising money, if you're raising a fund, or if you are trying to reassure all of the people who are in your fund, consultants, institutions, etc., it makes sense to do a limited amount of media, because that's how you speak to everybody at once and keep in the dialogue, like keep relevant. That I understand. When you go family office, like not that I'm in that situation, I never made $10 billion for myself, but I would probably shut the fuck up forever.
You would never shut the fuck up.
He's 65.
Right,
you don't know what I'm going to be like at 65.
Yes, I do. I want to talk about this. So let's just talk about what he says. This is a quote from him. So he's talking about why you would own gold. He said, as inflation picks up, people try and get out of fixed income. That's what you would think. That actually didn't happen, but that's reasonable.
Yeah, no, not
reasonable.
This time.
That's reasonable. They try and get out of cash, reasonable, and the logical place to go is gold. But because the amount of money trying to move out of cash and fixed income dwarfs the amount of investable gold, the supply and demand imbalances causes gold to rise. Okay, that used to be very accurate. It is no longer the case. I don't understand how you could say that gold is an inflation hedge with everything that's happened over the past few years. Money supply at all-time high, expected inflation high, actual inflation here. Commodities booming all over the place. Bitcoin rocking, gold not working. What more evidence do you need? I mean, maybe we're just in a lull, and it's possible that he's right and I'm wrong, but it's not working.
Well, it's obviously not working, but also it's not the best.
Hold on, Josh. Hold on a second, dude. This should have been the perfect environment for gold.
Correct. If you say to somebody, study the history of gold. Okay, got it? Great. Like we plug in the matrix thing in the back of your head. Here's what has made gold rise in the past. Okay, now I'm going to tell you the next year environment. The government, the Fed, and Treasury and Congress together are going to flood the world with an extra $10 trillion, and literally people are going to feel like the world is coming to an end. What does gold do?
And
any reasonable person would say 5,000.
How about this? Gold is also like I guess they would say a political turmoil hedge. On January 6th, when the Capitol was stormed, maybe that was political turmoil. If that's not, I don't know what it is. Gold got annihilated that day.
Did Bitcoin go up that day? I bet it did.
I don't remember.
Or at least that week. Yeah. So it has not done a good job of being a great trade for periods of inflation, because we're in one.
Man,
and it's basically doing nothing.
I get not being into Bitcoin. I just can't understand how you could be so into gold for the reasons that he mentioned and not see that Bitcoin is potentially a better vehicle.
So hence why when you retire, just stay retired. So he retired in July of 2020. Good timing. Yeah. And basically everything that he said is like completely reasonable. It's not fun talking to investors when you're down and you put on bets that don't work out. And that happens to everybody. And when you have a net worth, your own money of like 10 billion and your hedge fund is 10 billion, meaning maybe you have a couple of $100 million of outside investors' money left, fuck you, get out, take your money. I'm sorry, I was wrong. I don't want to answer you anymore. I don't want to do conference calls with you anymore. I don't want to talk to regulators anymore.
He should crawl into a hole because he closed his fund. I don't agree.
No, but like having a take that a $2 trillion asset class is worthless. Like
right. He's not the only one.
Yeah, but why? I guess all I'm saying is this guy won on a level that like 99.99% of humanity has not experienced.
We talk about this all the time. To me, the lesson is being a billionaire. Doesn't change who you are. Like just because you have a certain amount of money, now you stop talking and you just enjoy life. It doesn't. I don't think it works that way.
You don't think that I would be capable of doing that?
No.
I bet you I could do that at $100 million, not
I bet you
let
could
alone
not.
$10 billion.
I bet you could not. Okay, let's move on.
I bet you I could. All right, go. What do you have next?
I'm going. Let's talk about retail investors. So John Street Capital tweeted this really beautiful chart, but before you throw the chart on, all right, pause for a sec. He said Goldman Sachs estimates that there are $53 trillion, which is a lot of dollars, of total retail investment, and I'm confident in that assertion, Josh. $54 trillion of total retail invested assets. The advisor landscape continues to be incredibly fragmented. Who is building there? So, all right, now chart on. So
what's going on here?
There's a lot going on here. 90% of self-direct retail brokerages. Basically, what he's showing is how fragmented the industry is.
Okay.
That nobody has control of the market or even anything approaching that.
Okay. It will always be fragmented. It will never not be fragmented because it's a personal business. It's a personal business. It's why there's not 3 companies in America that own all the hairdressers and barbershops. It's because people go to the person that they want to go to and they get what they want to get. It's why there's not 5 law firms. It makes sense for there to be 5 supermarket chains. There will never be 5 law firms. So money management, financial advice, it will always be this fragmented. There will never be a Costco of financial advice. By definition, advice is personal. There can't be legal advice at that scale. There can't be financial advice at that scale. Now you can have very large firms with small clusters of practitioners, but this fragmentation is probably permanent, and I can say that with confidence because it always has been. It always has been. There's never been bigger concentration than what we see now. And then the second part of this, I guess I'd ask you, isn't the funniest fucking thing on earth how everybody counts each other's AUM as their own? Let me give you an example of what I mean. Chart on. Let me run through this for you. Okay. I have an RIA that I work with. Let's do it this way. I have an account at Morgan Stanley. My Morgan Stanley rep then leaves and sets up an RIA at Charles Schwab. He puts my money into Vanguard funds at Charles Schwab. Who has my money? And then there are Vanguard funds that own other Vanguard funds. So like we can go on and on through that like 2 mirrors facing each other. In the end, don't ever go by there's $53 trillion and half of this money is being counted twice and some of it 3 times. So yeah, like we work with Fidelity as our custodian. We also work with Charles Schwab. We have 100-something million on one platform, 1 billion something on another platform. It's their AUM, it's our AUM, and then we have it in ETFs, so it's BlackRock's AUM too. What are we talking about?
So, all right, there was another thing I want to mention quickly. There was a study of 1,000 U.S. investors found that 39% of millennials that are not using a financial advisor, the majority of them, 65%, plan to begin using one in the next 2 years. Is this idea that millennials will never hire a financial advisor nonsense?
Once again, also, some of the stupidest shit you will hear is people saying that all of a sudden, after 50,000 years of human civilization, there's going to be one generation in the midst of that doesn't need any help with money or doesn't want to talk to somebody when they get nervous about their fun. Really? That's the bet you want to make? Dumb.
How about this? Take a look at my Animal Spirits pod@gmail inbox. We get like literally dozens of emails a week from people giving us their entire financial lives and then basically asking us to be their advisor without asking us to be their advisor.
Correct. And you know what? 39% of millennials not using a financial advisor. Does that mean, hold on, can that possibly mean 61% of millennials use a financial advisor? That sounds higher than I would have thought it. That sounds higher than I would have thought it would have been. Are these 1,000 wealthy U.S. investors?
I didn't read the fine print. Don't focus on that.
All right. I don't think that most millennials currently have a level of net worth, net of debt, where it makes sense to have their assets professionally managed. But every millennial over the age of 30 probably should have a financial person in their life. that they can have set the right accounts up and do the right things for. I don't think that's controversial. I know there are like 5 or 6 guys out in Silicon Valley that think people are computers because they're computers. But I mean, I would say what's gone on in markets over the last 10 years is trillions more being given to fiduciaries to manage and not trillions coming out. So until that reverses, I can't imagine anybody's declaring victory on that call.
Where are we
do you have
going
anything
next?
else on this?
No,
All
I'm
right.
done.
Speaking of, PayPal offering trading. Would you trade with PayPal or with Venmo?
Yes.
You would, right?
Yes.
I think I would.
Why not? Why not?
Okay. So PayPal wants to get into trading, which makes perfect sense to me. SoFi basically is offering everything. I'm pretty sure, right? Is there anything SoFi doesn't do? Banking, brokerage, lending.
Square.
What am I? Okay. Yeah. Square just bought Afterpay. Square is servicing merchants, taking
Cash App.
payments. Cash App, which is peer-to-peer payments. Now, and you could trade crypto on Square. So I think what's interesting about this is that what we're seeing with the fintech apps is they kind of look like Citigroup in 1991. Like they kind of look like what Sandy Weil was saying, which is that people don't want to have 7 different places they go for their financial lives. They want one supermarket. They can get everything done in the same place. And that was the idea behind Citi and Bank of America. So it's the same thing. It's just happening on the app.
I don't know that I totally agree with that. I mean, it's so easy on your phone to have multiple different apps. I mean, it'd be nice to have consolidation. Don't get me wrong, but when I first saw this headline, I thought, I don't think it's necessarily going to work. I don't think it really costs them much to try it. They've got 400 million accounts.
Let's say you're a Venmo user and all your friends are, right? And then you also have Robinhood app on your phone. And you enjoy trading there, but it's not a big deal to you. You're not like a fan. And then Venmo offers the same exact features, the same ease of use, and you already have cash sloshing back and forth inside of Venmo, and it makes it much easier to fund your account and defund your account when you want to pull money out. Wouldn't you just say, fuck it, I trade on PayPal now?
Sure, why not? Nobody's married to Robinhood.
All right.
I think they have the best product. Robinhood has the best product. You could talk all the shit you want, but they have the best product.
Fair. This is PayPal's product doesn't exist. Right. So I'm speaking theoretically. This is Bank of America's analyst, Jason Kupferberg, who should probably send a resume to PayPal. Venmo has significantly evolved from once being a predominantly P2P platform where it is today as a digital wallet with multiple monetization levers. As the platform continues to morph into a super app, we expect these features will drive continued strong growth in Venmo users, accelerate growth in average revenue, et cetera, et cetera. So I think you have to be a super app. And you and I know all these people starting apps that do this one very specific thing in brokerage or in wealth management, in insurance. Like we talk to these companies or we hear about them. How many of these can really exist in real life? How many apps for financial services do most people, not you, most people want on their phone? 3?
Right. Not a billion. Do you remember how this came about? How eBay spun out PayPal?
Yeah, Carl Icahn.
So
Carl Icahn
this was
versus Mark Andreessen.
Oh, really? That part I don't remember. No, I don't.
Yeah.
So
I think Andreessen was on the board of eBay and fighting the activist. Like
so this part was
30%
interesting.
sure of that.
In 2014, this is from the Wall Street Journal. Analysts expect that once separated, both companies could be involved in or the target of subsequent deals. PayPal, with 152 million users and a potential market cap estimated at 31 billion, could become a target. So chart on. Look at this chart. So PayPal is now $335 billion. And John, if you go to the next chart, this part's fascinating. So eBay's marketplace was a bigger business than PayPal.
Yeah.
It is, chart off, it is hard, really hard in real time always to think big, right? Like PayPal was a big business. It was $30 billion. How much bigger could it get? It had 150 million people on the platform. Who knew where payments were going, right? I certainly could not have predicted that. And now it's $340 billion.
No way in a million years would I have thought PayPal would have a $340 billion market cap, which I think is bigger than all but two of the publicly traded banks.
JP Morgan's
bigger than B of A.
JP Morgan's 480. It's probably bigger than Goldman. It's probably bigger than Goldman and Morgan combined.
I think the only bigger financials are Berkshire, BlackRock,
It's bigger than Bank of America's
and
350.
JP Morgan.
Bank of America's 350. 350. So it's going to pass Bank of America. It's unbelievable.
It's bigger than Goldman, and when you have that much share price as currency, there's almost nothing that you can't do. There's no reason you couldn't become a brokerage firm. Like, how expensive could it be to build it yourself, or how hard would it be to find somebody to buy and just take whatever they have? So I feel like that's inevitable. And like, how long do they start selling insurance? Like, I don't know that would be a leap too far for them to make in 2 years. It just doesn't seem that difficult once you have the clients there. So I feel, look, I'm long PayPal, full disclosure.
Not to brag. Wow.
No, I've been long for a while. I'm actually thinking of averaging up, just given everything that I see them getting into and how easy I feel like they're going to mow everybody else down. I could be wrong, but they seem to be very good at launching things that people like. All right, let's move on.
The people over at Verdad, this is a little bit wonky, but what they were looking at is how much money does it take to move markets. Tracy Alloway's flows over pros thing is what they're getting at. And it's hard to quantify, but kudos to them for trying. So what they did was
over pros. Can you explain that? Explain it to everybody.
The idea that market positioning is as if not more important than fundamentals. That's the basic idea. So the Bank of Japan has been buying ETFs for a long time, for a decade, maybe longer. And they own 7%. So John, let's first chart up. They own 7% of the Japanese stock market. First they were buying the Nikkei, which is like the Dow. It's price weighted. Clearly that's going to push stuff around when it's constructed that way.
That would be the equivalent of our Fed buying the SPY.
No. The Dow.
Buying the Dow Jones,
which is price weighted.
Right. Okay.
Right. So then they started buying the Topix, which is our S&P. And if you look at the 90-day purchase, the rolling purchases, clearly they ramped it up big time in the pandemic. Okay, chart off. So what Rasmussen found, or I don't think he wrote, you can go to Verdad Capital to read this, is not surprisingly.
Sho Miyazaki and Nick Schmitz are the authors.
Okay, when you're talking about 7%, it does move the market. So they found that there were some days where 50% of the daily trading volume in the 10 most crowded stocks was being bought by the Bank of Japan. Now, the actual effect, according to them, was not as big as I would have thought. They're talking about that it was like a 1.84% move relative to the median stock. And then when they stopped buying, it went the other way. So certainly if you're in the market and you're a financial professional, you're sitting on a trading desk, you're definitely going to notice that whale. But from the average person's point of view, I don't know that it was worth paying much attention to. That was my takeaway.
If every trader in Japan and every international trading desk dealing in Japan is aware that they're doing this because they're announcing it via press release, then doesn't the market adjust to their presence like overnight? Okay, so that's one. Two, how is this different than basically the Fed making it so that all of the reserve capital at banks is just sitting there earning nothing, and banks are completely flush with as much liquidity as they want and effectively forced out onto the risk curve along with everyone else. And so that money, the transmission mechanism is corporate buybacks in the United States, for example. Companies could just borrow for cheap, buy their own stock. How is Japan doing it directly materially different from the Fed orchestrating purchases of ETFs here, but just going through a few layers of people first? Isn't it like effectively the same thing?
I don't think so.
We're going to have a $900 billion worth of buybacks this year. Arguably 75% or more of that is coming as a result of cheap money.
Right. No, I understand, but I think that psychologically it's different and the mechanisms are different. But I hear what you're saying. Listen, cheap money is cheap money. It has the same effect. All right.
Do you think that people were overly preoccupied with the presence of the Bank of Japan in Japanese stocks? Like, do you think that was a thing that a lot of people were concerning themselves with?
I wouldn't have any idea.
Yeah. I tend to think that once a central bank says they're going to do something, there's like 2 days of op-eds being written about how it's dangerous.
I
and
understand
then
what you're
we just
saying.
accept it.
How markets just react and adjust, but if they're buying that much, I would think it matters. All right,
they should just take the whole thing. Here's my idea.
Yeah,
BOJ should just take the entire Japanese stock market private. Nobody wants it anyway. No one will miss it. These stocks traded 15 times earnings. Nobody cares.
Terrible take.
Hold on. Take it private, and then you ready? IPO the whole thing. Like pieces at a time. Just bring it back out as an IPO. How exciting would that be? I feel like
SPAC?
Just
SPAC?
redo the whole thing.
SPAC.
No, just take the market private and then relaunch it. I bet you everything trades at a higher multiple.
Let's do
just
it as a
do
SPAC.
it.
All right. Next topic.
You know how treasuries that are already traded at a discount from new treasuries that come out at auction?
I get it.
You know that phenomenon? All right. I feel like that would be an interesting project for Japan to pursue. Can we talk about succession for a minute? It hasn't started yet, but I need to talk about it because
what's to talk about?
Well, this article in New York Magazine, which I believe is their cover. John, do we have art of that? Where am I?
Look at Cousin Greg.
Oh, yeah, I love him.
This is the best. This is the most perfectly cast show of all time.
You know what's interesting? There's 2 child stars in that cast. There's an Australian. There are a couple of British, and all of them are stage actors.
Which Australian?
Like, one of them is Australian. I'm not. I don't want to spoil. I don't want to spoil it for you. Yes.
Spoil it. Oh, is
Yes.
it Shiv?
Yes, in real life, Australian. They're all stage actors. That's why they're so good, and that's why they're so good with each other. Like,
I fancy myself something of a stage actor.
I
don't know if you
believe
knew
you
that.
do.
Right,
The
what's your
articles.
point?
The article just got me so excited for this. It's not until October.
October?
Is this the best? Is this the best show on TV now that
That's my-
Game of Thrones is gone?
This Succession is my favorite show, but Ozark is 1B.
Doesn't Ozark feel small compared to this though? Like this is like you invite your friends over for the premiere, not you, but like a normal person, right? Like this. I mean, it's pretty. It's like a pretty big event. The season 3 premiere.
I'm very excited. When's the last time you
right.
binge watched a show?
I would binge watch the shit out of this if I had it all at once. And I believe we have some still photos from an upcoming scene. Here we are. Logan Roy visits the New York Stock Exchange and is in search of the world's greatest and most handsome financial advisor.
What stock did he tell him to buy?
Did you watch that when we did that on TV? Do you know what we did? We
don't
played
remember.
a scene. We actually, like, on the way out to commercial break, I pretended to be one of his sons, and he like put his hand on my shoulder, and we like did a scene. It was very surreal. It was fucking amazing. Brian Cox is like probably one of the coolest guys I've ever met.
Duncan,
like celebrities.
Get that picture with me and Cousin Greg real quick.
Wait, that doesn't exist? Okay. Duncan, you do have something that I want you to get to though. Can we cut to for anyone that missed this week's Animal Spirits? I just want to make sure nobody misses this. Mike reading his old emails to potential employers before he actually got hired. Duncan, let's run that clip.
Wait, hold on. Before you do, this was a cold email. I'm like 90% confident in my assertion that this person got this email and was like, "Oh my God, you got to come see what this idiot said."
Run that clip now.
I am applying for an entry-level position. I am passionate about the market. Ben, you might have to read this for me. You know what? Ben, can you read this for me? I'm going to Slack this to you because I know I'm just going to crack up if I read this. I sent this to somebody. I don't know if I sent this before or after the interview.
Okay. There are a lot of buzzwords. I'm passionate about the market and I am seeking an opportunity to be part of a strong, cohesive team. I'm an independent thinker and very confident in my assertions. That being said, I am not too proud that I can't admit when I am wrong. Recently, I told my friend that the Atlanta Hawks would match up better against the Cleveland Cavaliers than the Orlando Magic would. Oh my God.
Who did you send that to?
Vinny from efinancialcareers.com.
That you thought the Hawks? What did you say? Hawks in 4? Like what were you doing?
My point was, and it's a good
I'm
point.
confident in my assertions. Is the greatest thing I've ever heard.
I'm flexible. If the market says I'm wrong, I change my mind, sir. That's what I was.
How old were you when you did that? Because I
25.
All right, so that's understand. It's more understandable if you were 22. 25 is, but I like that you were confident in your assertions. One of the funniest things I've ever heard.
I appreciate that.
If you guys haven't watched that video in its entirety and you want to see it again, check out Animal Spirits on YouTube.
Dude,
that was absolutely amazing.
I watched it a dozen times, and yeah, that was something. All right. Robinhood.
That's actually, but as stupid as that sounds, that was actually a better approach to a potential employer than the one that I got. Basically, the one that I got was, yo, listen, so nice to meet you. I'm a little fucked up from the Ranger game. I had a couple of beers.
Stop
but I'm gonna
saying
email
that.
You
I don't go to Rangers game. It was a Knicks game. How many times have I told the story?
From the Knicks game, but I'm going to email you tomorrow. I would have rather have heard I'm confident in my assertions. That's all I'm saying. All right, go ahead.
So Robinhood, they give away a lot of stocks. So this is, shut up. This is pretty cool. They gave away $79 million worth of free shares.
Dude, I love this article.
Which is, at face value, that's awesome. And it is awesome. It is awesome. However, the stocks randomly selected, you have a 98% chance of receiving a share between $2.50 and $10. So, womp womp. You know, you're not getting much. This part is hilarious.
Wait, but before you get to that, can you explain this? How do they pick the stocks that they're going to give to people?
It's randomly selected.
They go out and buy them?
No. It's in their inventory. No?
They have an inventory of like random
maybe they
shit,
don't.
and they're just putting it in people's accounts.
I don't know. They spin the wheel and they give you a stock. Who cares how they do it?
It's amazing.
So this is fantastic. So last fall, a company called Catalyst learned that the number of people who own their stock went from 25,000 to 280,000. This cost the company $234,000 to send out proxy materials. It's unbelievable. So then the SEC
and they're like,
in.
where did all these shareholders come from?
So then the SEC stepped in. They said, all right, we got to do something about this. But let me just ask you this. Why do we still send out physical mail? What the hell is going on? Is this the biggest waste of money of all time?
You're not even saying the funniest part.
Please,
They're delivering proxy statements to Robinhood users who got the stock by accident.
Yeah, they sold it. They sell it immediately, right? I mean, there's no lockup. You said what's so absurd.
No, they attend the shareholder meeting and vote and vote for boards of directors.
Yes, I got this.
Too much.
I got this $36 share of Catalyst. I'd like to make some recommendations.
Yeah, sir.
Have you considered a buyback?
It's the stupidest thing ever. I wanted to just throw this little quick anecdote in because I thought it's funny. Giving away stock is like the hardest thing in the world to do. There's like no good way to do it. I was asked to be on the board of advisors, and I got some stock, and the company's worthless now. But basically, it was this woman who was former Google. She had like very good intentions. She was like, I was trying to gift shares of Google, and it was impossible to do. And so I wanted to create a technological solution where people can give shares of stock as a gift.
That should be very easy.
High school graduate. Yeah. So, but you can't. You have to get somebody to open up their own account. So the workaround she was trying was like scotch tape and glue and just like trying to advance somebody from one stage to the next to ultimately open up an account in their name, but they signed the docs. And for obvious reasons, it was a wreck. So I think what's so funny is that Robinhood's just like, we just don't give a shit, whatever the rules are. We're just going to put stock in people's accounts until they fine us or they just ignore it. But we're just going to do it anyway. That ethos, as wild as that is the secret to Robinhood's success. Because I'm just remembering back to these very well-intentioned people trying to build a startup by the book and check all the regulatory boxes. And there's actually no way to do it. You cannot give a couple, you can't give their baby stock when the baby's born. You would have to open up a UGMA account for them. It's ridiculous. And Robinhood's just like, yeah, we just give stock out. So I thought that was funny. If they put shares in your account when you were first starting to trade, what would you have done with it? Would you have sold it immediately, or would you have like started to research the company?
I probably would have taken the cash and ran. I don't know.
All right. Why do you think people love getting 2 shares of a $5 stock? Like
No, I don't. Nobody wants to share for $5. It's exciting. You don't know what you're going to get. It's like spin the wheel.
It's like breaking a baseball card pack.
Yeah, it's like, ooh, this is exciting. And it's like, oh, I got Ford.
I think it's a great idea. I honestly,
I got City.
Right. I honestly like it. I like that they do that. All right, let's bring in Duncan. And by the way, guys,
there he is.
Last week we didn't get to wish Duncan a happy birthday. What day was your birthday?
It was Friday, the 27th.
Okay. And how old are you in North Carolina years?
I'm not sure if that's any different, but I'm 34.
34 years old. Look at you. Look at you.
Yeah.
Killing it.
Getting old.
What I would give to be 34 again.
Same.
What I would give. Right? Michael too, even. Duncan, happy birthday. The Duncan Hive is in full effect today on the stream. All right, what's the first viewer topic?
Okay, so first up, I just wanted to say we had someone write in. I want to say good morning to James, a big fan of the UK who listens to us on their 4 a.m. commute, which sounds pretty terrible. So when they're listening to this, hopefully they'll get a kick out of that. Our first question is from Joe, and Joe asks, I'm a 32-year-old career changer previously in sales who recently passed my exam to become an investment advisor representative. I just started at an office with 3 other advisors servicing about 120 households with around 300 million assets under management. We are affiliated with a nationally known privately held RIA, and it seems that RIAs are the future, so I feel like I'm in a good spot. Josh really inspired me when he recently mentioned that he was broke and basically unemployed 11 years ago with no idea of what to do in his career. My quick math says that he was right around my age. So my question is 2 parts. What's the most important thing someone in my position can do in their first year in the business? And the second part is, how do you recommend overcoming the natural concern that prospects might have about your inexperience when you're starting out?
Mike, want to take a guess what nationally known private held RIA they are affiliated with? He didn't say brokerage firm, so it's not LPL, it's not Raymond James.
I was saying, what, RIA?
Says we are affiliated with the nationally known privately held RIA. I don't know the answer. I'm just curious if you have a guess. I'm going to say Buckingham.
Good guess. Okay.
It's a good guess, right? Who else would it be? Who else has a situation like this where it's like a firm affiliated with a firm? Maybe could it be
United Capital?
No, that's Goldman Sachs now. They don't call it United Capital.
So I'm saying. All right.
Yeah. All right.
Might be
anyway,
outing them.
No, I would never do that. I'm just curious. Kidding. All right, Joe. First of all, congratulations on changing careers. If you're going to become an investment advisor representative, you have your work cut out for you. We have not enough financial advisors in this country to service all of the demand, people who need help. So you have jumped into a probably 20 or 25-year bull market. What's the most important thing someone in my position can do their first year? I would just say, like, get really good at
Wait, he was specific, Josh. He was specific about the natural concern that prospects may have about his inexperience. What would you say to that?
I would just listen more than talk. Like, I think there's a tendency, and this is has always been my problem in life too. There's a tendency to think that the way to impress people is to say the most, or to be the most bombastic with your statements, or to be the loudest, or to talk over people, or to make the strongest points. And actually, people that are engaging financial advisors already have things they want to say. That's why they're coming to you. They're not waiting for you to talk. They want to talk, right? Imagine you went to a psychologist and the psychologist spent the whole hour, your first visit, telling you about what school he went to and what degrees he has and how many patients he had, right? So the number one thing I would say in this stage of the game, just shut up. Let the prospect, the potential client, talk to you and listen. Actually hear what they're saying, because inside of what they're saying is the seed, the kernel of how you could actually be helpful. Like, listen to what the real problem is and then really research how you want to help them solve that problem in the next conversation. And if you do that, it may not look sexy, okay? But you're actually going to become a great advisor. And I cannot emphasize enough, forget about trying to impress people. If you're 25, they're going to think you're their grandson. You're not going to impress anybody. So just listen. Mike, what do you got for this person?
So
You've seen a lot of advisors.
This person's 32 years old, so I would say a few things. One angle that you could play is, listen, a lot of things that used to be true, no longer true. And you could give a million examples of people that have 20 years of experience but are an expert at an earlier version of the world. You can go that angle. You could also just be yourself. And listen, certain clients, certain prospects will be taken with one version of an answer that you give. Certain people will be impressed by saying less. So don't worry about, oh, this worked on this. I would just say be yourself and you'll figure it out. There's no like silver bullets here.
Unless yourself is like a really bad personality, then definitely don't be yourself. But you're a fan of the compound, so you're probably pretty cool, dude. I wouldn't worry about it. Be yourself. You should be okay. And don't feel like somebody who's been doing this for 25 years is automatically more qualified. They definitely have more market wisdom and more experience. But to Michael's point, there's a lot about what's happening in the world today that they probably can't understand, and you can. So
Also,
I think
if
that's
you
a
want-
really
if you
strong
want-
point.
If you want more specific answers, maybe reach out and we'll chat.
Ooh, are you offering up your tutelage? Your
Just saying.
Wow, look at
office
that.
hours? Look at that. All right, Duncan, what do we got next?
Talk to my secretary.
Okay, that was a good answer. I think that applies.
Definitely
to a lot of things, so good.
definitely seek out Michael's advice. He is confident in his assertions.
No
Okay.
doubt. But
Duncan, what do you got?
Okay, up next, Nick writes, I have a Roth IRA, which my father allocated money to throughout my youth and gave me a few years back with roughly 100K in it. I don't think the amount actually matters, but my gross income is over the amount to contribute to the Roth any further. So I wanted to know if you have any guidance on what I'm supposed to do with this account other than just sit back and watch it grow. Is there something strategic I'm not thinking of that I should be doing with this account? What would you do?
yeah, so
Michael?
I would say that I spoke to Henry Yoshida, the CEO of Rocket Dollar, on the podcast a few weeks ago with Ben, and he made a really good point. So Henry's company allows you to invest in alternative assets in an IRA. And he said something that struck me. It's so obvious, but we have been trained to invest very patiently, which is good, and in a plain vanilla way for our retirement. You buy a target date fund, you buy a few index funds, maybe rebalance. Perfect. Nothing wrong with that. That's what I do. And then in your taxable account, you go for grand slams, which actually is backwards. Because
Taxable account is like trading, and the retirement account is asset allocation.
And I'm not suggesting that you go nuts trading your Roth IRA, but if there were some swings that you wanted to take, whether it was whatever, crypto, startups, anything, that's what you do in your IRA. So I'm definitely not suggesting that you blow out of the 100,000 and swing for the fences, but there are other things that you can do besides for just buying and holding index funds.
But does that apply to a Roth where the taxes have already been paid?
What do you mean?
Well, I know a lot of people who are very aggressive in their IRAs because they've had this same thought process that you just laid out, which is that I don't have the tax consequences of taking gains, so I actually should be trading in the tax-deferred account, and I should be more conservative in my brokerage account where I actually will have tax consequences. But if it's a Roth, that's not a consideration anymore.
Well, listen to this. So your money is already locked up, right? So for example, I use Masterworks in my Roth IRA that I can't contribute to anymore. I use EquityZen. Was that my Roth? I can't remember. But anyway, the point is, why would I tie up my taxable dollars in a liquid stuff like that? You wouldn't. So that's what I use some IRA money for.
Okay, so that's an interesting point also. Some of the most aggressive investments you could make might also require the longest holding periods to work out.
Right, so that matches up.
That's a really good point, is to like think about the tax-deferred money that's locked up till you're 65 anyway as your longest duration bets. So it's two ways you could look at it. You could say, I should short-term trade here because I don't pay capital gains taxes. Or you could say, you know what? I'm not touching this money anyway. I might as well put it into things that need 10 years to fully appreciate it. I don't know that there's definitely a right answer. Nick, I would say that what Michael's saying has a lot of truth to it, but then the version that I'm laying out also could. And I think maybe it's dependent on what your personality is. But I think where Michael and I would both agree, sit back and watch it grow is probably, for most people, preferable to like trying to be really hands-on with it all day. You're not going to do anything to help yourself if you're in there fucking around all day. Like, that's just not how this works. There's no such thing as trying harder when it comes to investing and trading. I mean, Michael, is that like a fair point that can sum up
Dude,
most people's experience?
I don't even know anymore what's real.
All right.
Yes.
All right. I want to thank both Nick and Joe for submitting their viewer topics. And Duncan just bounced. Duncan, great job. All right. That's all we have this week. If you want to see your topic brought up on the show, it's very easy. Send us an email at askthecompoundshow@gmail.com. And for the latest in financial blogger fashion, don't forget to check out idon'tshop.com. You have an abnormal return shirt. We don't have that in the store, though. How do I get that?
Like, I wore this when Kobe was born, I think. This is an old
Was
one.
that
This is like 20
Was that a
2015.
Stock Twits era abnormal return shirt?
It's just a Tata's production.
It is.
Yeah.
All right.
I like it.
Maybe we got to get that in the store too. Tadas Visconta, author and editor at Abnormal Returns, also director of investor education at RWM at Red Horse Wealth.
14 and 9-year-old earn over $30,000 a month mining cryptocurrency. My dad just texted that to me and goes, "Huh?
Yeah. What do I
Do that in your Roth IRA."
Do that in your Roth. What do we know? All right. Listen to Animal Spirits every Monday and Wednesday. Make sure you check back here this Friday for the new Compound and Friends. We have 2 guests this week. You're going to love it. And we will see you guys next Tuesday for an all-new What Are Your Thoughts? Round of applause, and we're out.